If you've ever wondered where your down payment can actually come from when buying a home, this video is for you. Whether your credit score is 500 or 850, FHA gives you several ways to make homeownership possible, even if you think you don't have enough saved. And one of the biggest myths I hear from buyers is, I can't buy until I save enough for 20% down payment. And that's simply not true. FHA loans allow you to use your own money, a gift from family, down payment assistance, and funds from retirement account, and even cash on hand to buy a home with as little as 3.5% down. And in today's video, I'm going to break down every acceptable source for your FHA down payment, how each one works, what documentation you need, and how to avoid the common mistakes that can slow down your loan approval process. We'll also go through 3 real-world examples of buyers who use these options successfully, including one who combined multiple sources to buy their home. So whether you're a first-time buyer or you're starting over after renting, this video will show you exactly how to get into a home, even if your savings aren't where you want them to be right now. Hi, I'm Alex Ramirez, and I help first-time buyers and step-up buyers navigate the mortgage process with confidence. But don't forget to like, subscribe, and tap that bell so you don't miss any of my videos in the future. I do weekly updates. Okay, so now let's dive in. Let's go over understanding FHA down payments. With an FHA loan, your minimum down payment is 3.5% down of the purchase price, which means on a $450,000 home, you only need about $15,750 down. But here's the great news. FHA doesn't limit where that money can come from, as long as it's legal, traceable, and properly documented. FHA is designed to help real people, not just those sitting on big savings accounts. Whether your funds come from a checking account, savings account, brokerage account, TSP, IRA, or even your 401k, you can use them towards your down payment and closing costs. This flexibility is what makes FHA one of the most powerful tools for buyers who are ready to stop renting and start building wealth through real estate. Okay, so let's go over your own money. So down payment using your own funds. Let's start with the simplest and most common source, your own funds. Money in your checking, savings, brokerage, or retirement accounts all count as valid sources for your down payment and closing costs. The key is that these funds must be seasoned or sourced. And seasoned funds means that the money has been in your account for at least 60 days. And source funds mean you can show exactly where the money came from. So if you suddenly deposit $10,000 from selling a car or a side business, your lender will ask for a paper trail, copies of checks, deposit slips, or proof of the sale, like a bill of sale. So the rule of thumb is simple. If it's not regular payroll deposit, your lender needs to see where it came from. And here's a pro tip. Avoid moving money between multiple accounts right before applying for a home loan. It only makes your file more complicated. Keep things very simple and transparent for your loan officer. And let's go over gift funds from family or very close friends. The next major option, and one that helps a lot of buyers, is gift funds. FHA allows family members, close friends, employers, or even charitable organizations to gift all or part of your down payment. So that means your mom, dad, sibling, grandparent, or even a lifelong friend can contribute towards your home purchase. And that money can cover from both your down payment and your closing costs. But there are rules you need to follow. So number 1, the funds must be a gift and not a loan. Money that you're getting back, you can't pay it back. Number 2, you and the donor must sign a gift letter stating that the money is a true gift with no explanation of repayment. And number 3, here's an example of a gift letter that your lender is going to use. The majority of lenders use the same gift letter. It's going to be right here. It's a specific document that all lenders use. I'm going to put the letter in the description so you can get your own copy. And number 4, the donor must show a bank statement verifying the funds were available before the transfer. So if they've been transferring money, they're gonna have to source that information as well. And number 5, the borrower must show proof of the deposit, or even better, have the donor wire the funds directly to escrow. Doing it this way eliminates a ton of extra paperwork, and it's gonna be a lot less headaches for you and your loan officer. So let's go over an example. Let's say Jessica is buying a $500,000 home with an FHA loan. Her parents decide to gift her $20,000. So her lender provides a simple one-page gift letter, and her parents wire the funds directly to the escrow company, and that's it. No extra tax paperwork, no repayment obligation, and her file is clean and can close fast. And here's a pro tip. The best time to receive the gift of funds is right before or at signing your loan documents, not months in advance. That'll minimize questions from underwriting and avoids the need for multiple bank statements over and over again. It's going to be a lot of headaches it's going to save you. And let's go over down payment assistance programs. A lot of people choose this option as well. If you don't have family support or very much savings, FHA approved down payment assistance, or DPA programs is an acronym, can help bridge the gap to help you get into a home. And these programs are offered by city, county, or state agencies, and they can cover part or sometimes all of your down payment and closing costs. And they come in a few different forms. So grants that never have to be repaid, deferred loans with zero interest, they repaid when you sell or refinance your home, and forgivable loans that disappear after a few years of home ownership. So speak to your lender and see what options they have available. And keep in mind, the lower your credit score, the harder it can be to qualify for these assistance programs. Most DPA programs require at least a 620 to 640 FICO, so if your score is under 600, you want to focus on your own funds or gift options first. Let's go over another example. Marcus and Dana were renting in Ventura County with a FICO score of 660. They used California Housing Finance Agency, CalHFA, down payment assistance program that covered their full 3.5% down payment on their FHA loan. And they only had to bring $2,500 at closing. 2 years later, they refinanced into a conventional loan, and once their equity grew, and repay the down payment assistance program and kept the house they thought they couldn't afford. And let's go over retirement accounts and those options. You can also use money from a retirement account such as an IRA or 401k. For IRAs, you can withdraw up to $10,000 penalty free if you're a first-time home buyer or if you haven't owned a home in the past 3 years. And for 401ks, you can either borrow or withdraw funds. Borrowing is usually better since there's no penalty or tax, and you pay back yourself through your payroll deductions. And I cover this topic in full detail in my other video, how to buy a home with an FHA loan using your 401k. So make sure you check out that video next. And let's go over combining multiple sources for your down payment. Here's something many buyers don't realize. You can combine multiple down payment sources. You might use part of your savings, a small gift from family, and a 401k loan all together. FHA doesn't mind as long as everything can be documented and sourced. And let's go over another example. Elena, a program manager, wanted to buy a $475,000 condo. She had $8,000 in savings, borrowed $10,000 from her 401k, and received a $5,000 gift from her grandfather. Her lender verified each source with a paper trail, and she closed smoothly with a total of $23,000 towards her down payment and closing costs. And that's the beauty of FHA. It's flexible, realistic, and designed to help people like Elena become homeowners sooner rather than later. And if you're already ready to explore which of these down payment sources make the most sense for your situation, don't hesitate to reach out to me. My contact information will be right here on the screen. Feel free to give me a call or send me a text message, or you can go to my description and schedule a discovery call, and we'll go over all the details. And let's map out a plan for you to buy your home step by step. Now let's talk about something a lot of people ask about: cash on hand, or what mortgage professionals like to call mattress money. This simply means cash that you've been saving at home, money not currently in the bank or any financial institution. FHA actually allows cash on hand to be used as a down payment source, but there are specific requirements how it must be documented. FHA defines cash on hand as funds held by the borrower outside of a financial institution. That could be cash you've been putting away little by little from tips, side jobs, or personal savings. And to use it, your lender will need a written explanation, detailed letter from you describing how the funds were accumulated, how long it took to save those funds, and why you kept those funds at home and instead of a bank. The lender then determines the reasonableness of your explanation by reviewing your income, expenses, and your spending habits to ensure the amount makes sense that you're saving at your home and not in a bank. So here's a pro tip. It's always best to deposit your cash into your bank account at least 60 days before applying for your loan. That allows it to season and simplifies your paper trail. And if you've been saving cash at home, don't worry about it. It doesn't disqualify you. Just be ready to document how it was saved and be honest about your financial habits. FHA is flexible, but transparency is key. And let's go over the paper trail, sourcing and seasoning funds. Every FHA loan requires that your lender can trace your down payment. This is called the paper trail, and it's one of the most important parts of your loan file. Here's what you'll typically need to provide: bank statement showing your funds, proof of any transfers or wires, gift letter if it's applicable, retirement or brokerage account statements if you're using that, and an explanation letter if you're using cash on hand. And remember, timing matters. Try to organize and provide all this 2 weeks before you make an offer on a home so your lender can pre-approve you and be confident in your pre-approval. And here's another pro tip: avoid large cash deposits right before applying. Cash can't be traced, and FHA requires verifiable sources for all down payment funds. So when you handle this the right way, your approval will be faster, cleaner, and stress-free. But remember, if you do have cash on hand, you're going to have to provide an explanation letter. And if this video has helped you understand how flexible FHA really is, don't hesitate to reach out to me. My information is going to be on the screen. And also, don't forget to like, subscribe, and tap that bell so you don't miss any of my videos in the future. And here's the truth: your down payment isn't about the money itself. It's about using what you already have to start building wealth. Whether it's savings, a gift, a program, or even a little mattress money, it's all about leveraging your resources strategically. And your home is not just a place to live, it's an asset that appreciates, gives you tax benefits, and protects you from inflation. So instead of thinking, I can't buy a home yet, think, which of these sources can I use to make it happen right now? And if you've been thinking about buying your first home or returning to the market, let's talk. And remember, be smart, be prepared, and let's get you home.